when you're looking at a company and if it could be, a $1 trillion market cap or whatever number you want to say, I like to just say a company that lasts for decades, right? Because what do we know historically in the S&P 500? Within 15 years, that thing gets shaken up and there's only like 10% of the companies actually left, because there's only certain companies that last for decades, and it's because of their founder-led leadership. It's because of their employee culture that they make, that people want to stay and work there. And then it's also about the problems that they solve and the return on investment and value they bring their customer base. And so with that, I believe they fit all that criteria. I believe that with the different use cases and their understanding of themselves that they needed to change to grow at scale and truly achieve their goal, which is to be the ultimate software company in the world and achieve alpha for any kind of industry that's willing to change and be aggressive in innovating. You have to um, you have to really focus on expanding to the mid-market. You have to make it easier to adopt. You have to have marketing. You have to have salespeople. And they're doing all of those right things. And so it goes back to that, Tesla type business model that people, if something's broke, if something's not broke, don't fix it, right? There's some of the greatest minds and companies out there that started with premium offering products or even freemium product models to then get adoption. At the end of the day, why do we like SaaS? We like SaaS because it's reoccurring, it's predictable, it's high margin. We like the ability to see an ecosystem because that means more opportunities for growth. And we want to see customers stay with that product and stand by it, right? There's a reason why Apple leads in North America as the main mobile provider, because they have a brand. They are probably the most well-known brand in the world. Well, I believe for the enterprise, over time, we will see with all these different use cases and the numbers to back it up and the evolution of the product line, that Palantir could be that brand for having a operating system that you, just like you ran Windows for the operating system for your laptop or desktop, the operating system for your business that makes it more profitable and makes it more streamlined, that makes it more efficient. I think they're executing on that and they're showing that. So don't pay so much attention to the numbers, but look at what they're doing from a use case model. Look at how they've added 60 new sales reps this past quarter. Look at the marketing commercials and redesign of their website. They understand people are talking to Alex and Sankar and making sure to whisper in their ear that if we want this to go global, if we want this to be what we're trying to strive for, we do have to conform a little bit. And they're doing it in a way where they're executing, but also they're keeping the company culture intact. And they're also keeping that culture of who they hire intact. Because you even heard on Sankar, he said, we're a artist factory, right? We're not a traditional factory where you're just going to go in and get your engineer 2 level and your engineer 3. No, you have to be willing to be nimble, flexible, and adopt that company culture. And they have that, and people are following there and staying. There's a reason why they say 17 years before they went IPO and still collected and then finally got those shares. And a lot of those people are still there. So I think they're doing all the right things in what you build a legacy of a company.
Hey, thanks, Tom. Just reminded me of the example. It was one of the first time I interested in Palantir. I mean, this is so BP partnership with Palantir started in 2014. So guys, this was the time when the oil was $100, and if you would have asked any oil and gas company, I can tell because I was there, is nobody would have thought that the energy transition and these companies are going to invest in offshore wind and large solar plant and the retail electric and all that. Now, BP started their partnership with Palantir with the focus on improving production operation, automating a lot of data solutions in terms of either reservoir characterization and other cases. However, as we saw that whatever happened in last 2-3 years, BP actually pivoted their strategy largely from oil and gas moving forward towards renewable, and they have made some of the quite aggressive targets for themselves. But as we saw that when BP was working on production operations in North Sea, they actually started working with Palantir for the digital twin model, which came as an Alex. Name is Alex. I mean, you can see on YouTube on it. Then last year, BP ran into crisis when they went into COVID-19, and this is where we saw that the use case of using Palantir for supply chain came up, and they showed the savings, like how much savings they have done. And then BP decided to move into the renewables, and they said, okay, we are extending our partnership with with Palantir in terms of renewable energy, in terms of carbon abatement studies we are doing. So what they are seeing that the flexibility of the tools. That means once you have this tool and once you get acquainted with it, it is multidimensional in a way that means tomorrow you are looking to explore in a direction that was not on your radar when you started the partnership. It is still a healthy partner and probably the strongest partner to work with you. And this is one of the things which has also been identified by some of their other large legacy company partners. So, for example, Merck has a partnership with them in a form of a venture or company, which is Syntropy. We know that how Airbus used them for Skywise. Having said that, I mean, everything is not so rosy for Palantir. Our company is free from risk, and apart from like geopolitical risk, there is one risk which is very alive in my mind. What Palantir is, if I exclude the government software segment, especially US government software segment for the time being. And if I exclude whatever they have done in terms of COVID last year, we are not seeing Palantir yet dominating an industry outright. So, for example, I mean, you go in an industry, say a pharmaceutical, and you say more than 30%, 40%, or the leading ERP solution in this company end to end for big data is Palantir. That has not yet achieved. And this is where one of the big risk is the two school of thoughts that we discussed that either enterprises are going to adopt one solution or they are going to build a lot of bespoke solutions working with several partners. It is not yet realized. If Palantir has to become monopoly over the time, Palantir has to dominate at least certain industries. In order to dominate those industries, they need more diversity of people. In terms of this diversity, is the people who are coming from different backgrounds and in different parts of world, which allows them build relationship in these industries and help them to understand how to best deploy your solutions at a very fast rate in these industries. So until and unless, I mean, I start seeing Palantir dominating these industries outright, I mean, I will always keep it as risk. Even in the US software segment, if you remember the discussion what Alex and Shyam discussed last time was they said the US or the government part of their business has a total addressable market of 63 billion. We already know that even if we take more than half of their revenue coming out of government, even if we take 70% out of it, this is still a little shy of a billion out of it. That means out of the total stated market they had of 63 billion, they still have not reached that kind of density within that market. We have also seen that since COVID and geopolitical threats between US and China, the increased spending on AI, that revenue, the total addressable market for government is going to increase. So even in the sector where they are very strong, they still need to build that kind of a strength where they control at least 4 to 20% of market. Because once they reach that point, I mean, the overall revenue will have a significant boost. So having said that, all all hints are saying that they are moving in that direction, but they hasn't reached it. The journey is still quite far. So these are the kind of things. If this doesn't happen in next 1 year or 2 year or 3 year, I mean, yeah, I mean, I'll be a bit concerned and I'll be thinking like, okay, what's going on? So, for example, another next marker for me is a target that which quarter they actually achieve 400 million. And my bet is that it should be the next quarter. Okay. I also expect them to reach revenues of 600 million by the end of Q4 2022, because the way they are going, I mean, a company like this should be very sticky and should keep generating more revenues with existing customers and finding new customers. So yeah, I think that really very interested to see like how it works out. One thing which I'm missing in presentation, I mean, I know that information exists, but not yet shared for strategic reason is I want to understand like what are the financing gains. They haven't reported any financing gains from any of the SPAC investment. So once these SPAC investments goes and the companies become public, they actually have to book at some particular time that what they invested and how much financing gain came of it. It will be different from the cash that is coming or the revenue that is coming from operating activities. It will be revenue from financing activities. We have not seen it yet. We also have not seen the integrated details that how they are going to generate revenues from these companies in future. Is it license? It is revenue sharing. It is a risk performance mode kind of system, because these companies are built around Foundry. So all of their revenue is directly related to Foundry. So what is that system? Is it a fixed fee? Is it a milestone based fee that Palantir will not charge until they reach a certain milestone? After that, they will get a flat fee around it. Is it a mix of it? We don't know details about it. If it turns out the way they have gone about it, I think they're very clear that they always want a fee model which is linked to performance, because they are backing themselves that with their product they can really improve the performance. So I'm very curious to learn what are these models with the companies like Lilium, Argos, Road, Cellularity, and how that revenue from operating activities from these companies will come, and what is that model, how it is accounted for. What's the financing one is okay. I mean, I assume it's based on the equity they have taken, but I still need to see what kind of equity gains they get in. So this is what probably I would be looking forward in the next calls, or probably next few calls. Guys, any of you who wants to come, want to share, ask question, just please raise your hand and just send a request, and I'll bring you in. Dom, Jacob, would you like to respond? I mean,
Well,
on
Jacob
my
stuck. Yeah, I tried to approve his request like multiple times. It's not. Maybe you have to approve it, so he's not able to speak just yet. But if you approve that, he should be able to. And would love to hear the Wealthy Owl and some of these others that are part of the Palantir army. The Wealthy Owl definitely wrote the best 101 on what Palantir software is by far. If you haven't checked out that article, it then got retweeted like 100 plus times and over 500 likes. So would love to hear some of the other Palantir shareholders and what they think of the earnings.
I agree. Jacob, I'm trying to add you, but I'm not able to. I have invited you, but no response. Would you please like sign off and join back if that can help? Yeah, I think please, guys, the Wealthy Owl. I mean, I agree with Dom. I think it is one of the best article I have seen on Palantir. Quite detailed. Would love to have your thoughts on it. Jacob, I think you have joined now. Would you like to pitch in?
Yeah, I think it's time to get a new phone. Twitter is pretty glitchy on mine. But I just wanted to comment about what you said about kind of the terms of the deals with the SPACs and what those kind of look like. What kind of licensing agreements? Do they how much are they charging for Foundry, and is it contingent on certain growth? Stages of each business. I think questions like that would be awesome for Say. Anybody listening that hasn't created an account on Say, I think it's Say Technologies. Correct me if I'm wrong. We as retail investors, we can ask some kind of interesting questions that analysts might not be as concerned with. Theirs tend to be more financial based, but we can kind of get down into the nitty gritty of Foundry for builders and things like that, and kind of what the relationship is like with those SPAC partners. So I think for everybody listening, if you go create an account on Say, upvote those kinds of interesting questions that we might not otherwise hear from Wall Street.
I think that's a very good point. I think also within internal groups, like with discussions we do, I think we need to frame these questions and post in time and promote them on Twitter Spaces so that we get the required votes. Some of these questions to be selected for the next investors call. Hey guys, one thing I'm very keen to understand from your side also. I mean, I have my own views that I shared on the risk of the Palantir. What are the milestones we are looking? I mean, who could be the potential competition? Because one thing I always believe is that people are really genuine sometime in bringing new innovation. That means if you push some of the quality guys and you pin them down to in the wall in a competition with Palantir, some of these will come up with some solutions. They may not sustain, but they will fight back. I mean, and so these things will happen over the time. And some of these we don't know. I mean, they can succeed also. I mean, because the way they present it. So, a view in terms of the risk on Palantir and what would you like this company to do? What are the different milestones you would like to see, and who do you think is competing with them directly, indirectly, or could be a very large threat in the coming years? I think because we are all talking positive, but to be fair, I mean, Palantir is not yet generating 20 billion revenue per year, and a lot of things can go wrong in their journey.
Yeah, no, I think it's always fair. You have to ask the bear case and look at both sides, right? As an investor, you always have to do your diligence and think through that. They're not the biggest company out there, right? So when I think of bear case, I think of who has more cash to throw at creating a competing product. Now, granted, Their product has been around for almost 20 years, and you know they have a good footprint of keeping customers and have gotten those government contracts. But always you have to have in the back of your mind, if they keep, you know, capturing customers and having customers run this software as their core business in the ERP space, and even just in general in tech, why wouldn't a Amazon or a Google or someone who has the amount of cash to throw at innovation and talent to create a competing product? For me, that has to be one of the bear cases there, because at the end of the day, right, with stock-based compensation, how they kept a lot of the great talent they had was by enticing them with stock-based compensation, and they wanted people invested in the company long term. But cash is king. So as we've seen with all these different acquisitions and mergers that have happened in the last 24 months, overall in tech, and will continue to happen, I think you just have to be respectful of that, because you never know what could happen with those companies that have the kind of cash at hand to throw at creating something as a competitor.